on my computer so I can edit it. And James, you are all set. You go ahead and start the presentation.
Okay.
And
so
this is for...
we are recording now,
Yep,
correct?
it's all recording right now.
Okay. So first of all, we have... Apologize, guys. I have sent to your... I've sent through the chat 2 items I would like you to download to your computers. Does everyone see that? I want to make sure you can get into it.
One says filing requirement, and the other one says head of household.
Yep.
That's what you're looking at?
Yep, that's what I'm looking at.
All you guys got to do is click on where it says download, and it should download. It'll ask you where you want to save it typically.
Yeah. So I'm going to give you a minute. Could everyone... boy, this is a little different when I'm starting to share it, doesn't it? It changes what we're seeing.
Yeah, it'll change a little bit.
Yeah, a little bit. It's just I'm trying to figure out how to...
This is, guys, having this as the first class, we get all of the little problems for this one, okay?
Yeah.
So this is the one we got to be patient.
Exactly. Be patient with me. I'm learning a lot of this too, along with everyone else. So.
And I got to say this for James, guys, you have to understand something. For him, for me, this is not new because I use Zoom all the time. But for James, this is brand new, and he's doing awesome at it.
Yeah, thank you. Thank you. I actually did use the, Ryan, I don't know if you knew this, I used the corporate's version of this. What is that called?
Oh, Blue Jeans?
No, it was before they used Blue Jeans. It was the one I used last fall. It's the same thing, but it's not as robust.
Free conference call.
They've got another one. Anyway. Okay, so when everybody is able to download those, the ones that can, anyway, could you let us know, just pipe up and just speak up or let us know through chat? So, Rodolfo, do you have yours saved?
Yeah, I just now saved it.
Okay, excellent, excellent. Good, good, good.
Where did you find it?
Okay,
right
under chat,
room,
click on chat so you can expand chat out.
And you'll see 2 little icons. One says for the head of household, and the other one says it, and then it'll just say download below it. I'm trying to think of what it will say on the phone. It should say the same thing pretty much.
It's probably just going to cut it. The first one says 01C and 01, and the second one is 01D. That may be all you see on a phone if they truncate it.
It says yes from James.
Oh, sorry. Whoever just spoke, I could barely hear you.
That's me, and I just see something that says yes from you. I don't see anything to download.
Are you in the chat room, the group? Oh, yes. No, that was from Naomi. Go right above that. Scroll above that. Do you see that?
No, I'm sorry.
Okay. Don't worry about it, Amanda. We can also transfer the files out to you. I think we're going to make that a regular practice as well, we'll send out just in case.
Yeah, I think so.
So don't worry about it. We'll make sure.
Amanda, it might be just because you're on a phone. Maybe there's some restrictions on the phone. Maybe it's not as robust. So let me go ahead and get this started. So I'm making this a little bit bigger. All right. So the documents I send out, we're going to use as it comes up. Those are just to help you with it. So look, keep in mind that for this course, the first part of the EA material is really your basic personal income tax return. It includes pretty much everything you guys that were CSAs, it pretty much includes everything that you saw our preparers doing, except it will not include hardly anything about any self-employment business or rentals. Now, really, I have thrown a little bit of that into this later when we get into the later sessions. And the reason I did is it's a good idea still to introduce you to it now, even though that's not really going to be part of the hardly that there won't hardly be anything in there about that in the EA material. But again, what we're covering are chapters 1 through 3 of your reading. And so we're just going to go through it. And incidentally, I also want to share this with you. Our presentations, we're trying to somewhat correlate it with the book, but keep in mind, we're not teaching exactly what your book teaches. A lot of times and Ryan, when he, by the way, I don't know if we ever explained this, Ryan, but to them, but Ryan is actually going to be teaching part 2. I'm teaching part 1, he's teaching part 2. And we're going to be teaching, when we do our presentations, we're not following your book. You read your book. We don't want to repeat what's in the book. We want to deliver it to you a little different way, the same type of material to help you see it from a different perspective. So what we're going to be using is different materials that we've put together to help you understand the same subject matter. So it's not always going to be exactly in the same order as the book, but it'll correspond to it. We have the chapters corresponded to our presentations. Okay, so if you have questions during this, go ahead and you're welcome to speak up or raise your hand or type a message just to get our attention. Okay, so let's talk first of all about filing information and requirements. When you start any tax return, you have to gather certain critical information. What are some of the information you guys would have to gather? Is there any chance you guys could unmute and just talk for a minute? Just what are some information you know you'd have to gather to do a tax return?
Amanda, you still have your...
Yeah, I can't hear you, Amanda. There we go.
Sorry. Name, marital status.
Yep, name and marital status, Amanda said. What else do you think you would need to get there?
Social security number.
Sure, the identification number, absolutely.
Dependents.
Dependents, if there are any dependents, good. And see, those are some basic things, and we're going to talk about actually all of that today. As you can see here on the screen, it's just saying get this personal information. It's got to go on the 1040. And for those that are brand new with this, Form 1040 is nothing more than the name of the tax return you do for the IRS. Okay, you need all this information so you know how to file their return. So what is some of the information you specifically need? Well, one of the things you want to always figure out is you want to, before you even start a return, Ryan will agree with me on, you want to find out before you ever start a return, is this person required to file a return? What a waste of time if you get a return started and then only when you get to the income section of the return do you figure out they have no income and they just needed to ask a question. Or
And
maybe
that's a
they didn't
major
have,
thing.
yeah, maybe they didn't have any income and there's no reason for them to file. So why waste your time and their time to even start it? Okay. So that's the first thing. You want to find out, you want this information because you need it to find out if they're required to file. And if they're required to file, how should you report it and calculate everything? Because again, there's information there, and if you don't know some of the words that I'm using, it's okay. Don't worry about it right now. For some of you, you're bootstrapping, meaning I'm going to use some terminology at times that you might not understand, but I'll define them when it becomes important for you, okay? So like, for instance, standard deduction. To know what your standard deduction is, you have to know certain information about the person because that affects how you do your reporting. It affects how you calculate their return, okay? So biographical information includes the citizenship. You know, are they a U.S. resident or a non-resident or some mixture of the two? Are they a citizen of the U.S.? What's their birth date? You know, how old are they? What's their marital status? Are they single or married? These are all some basic information. Now, all people for citizenship. Now, notice at the top there, you're going to notice that it says citizenship or residency. That's what we're going to talk about for a minute. What does it take for citizens or residents? Well, all people for tax purposes fit into one of these categories. First of all, they're a U.S. citizen. They were born here or they got naturalized. Naturalized just means they weren't born here, but they became U.S. citizens by going through the steps. Or they're aliens. Okay, aliens just means obviously somebody who's not a U.S. citizen. But you can have aliens that are residents in the U.S. That would be a resident alien. You can have aliens that are not residing in the U.S., not living in the U.S. That's a non-resident alien. You can have dual status taxpayers. Now, who can give me a guess what a dual status taxpayer means? No guesses out there?
They have citizenship in more than one place.
Can you get just a little closer to your phone? I cannot hear you. I'm so sorry.
They have citizenship in more than one country.
Yeah, that's right. They're citizens of more than one country. I have a close friend that's actually a U.S. citizen and a citizen of England, and that's because his parents won from each country. So that's all that means, and that affects how a tax return is prepared. Also, you can U.S. citizens and resident aliens are subject to the same filing requirements. So if you have a U.S. citizen, regardless of where they're living in the world, they have certain filing requirements. An alien that's living in the U.S. has the exact same filing requirements. Now, as a practical matter, that's normally what you're going to deal with when working for our company. But for purposes of the test, you need to know that a resident alien is going to file the same. But if you have a non-resident alien, which is the fourth bullet point there, if you have a non-resident alien or dual status taxpayers, they might have different rules. There's certain things, checklists you have to go through to determine if they're going to be treated as if they're a resident alien or a non-resident alien. We are not going to cover in any kind of detail, and you don't need to know it to pass the EA exam, how to handle non-resident aliens, other than you'll touch on it a little bit, but you don't worry about it, other than knowing that is a category, because non-resident aliens actually have to file a different type of Form 1040. It's actually called a 1040-NR for non-resident. Don't worry about that. We're not going to cover that, other than I just need you, for sake of passing a test, to know that that exists. Okay? So we've talked about citizenship and residence. Now let's talk about date of birth and age. Individual tax returns normally end at the end of the physical calendar year, meaning a normal calendar year is January 1st through December 31st. So as of the last day of the year, whatever age they are, that is the age they are considered for the entire tax year. So somebody that is born in June and he turns, say, 30 in June of 2018, he's considered 30 for tax year 2018. For tax year 2019, he'll be considered 31. It's all based on December 31st. How old are you on that date? Now, how do you determine the taxpayer's age? Well, you simply subtract the year they were born from the current tax year. So looking down below just a minute, look at the actual formula. This might help. Tax year minus birth year. Ignore the rest of it for a minute. That's an exception to the rule, okay? Tax year minus birth year. So if someone, and I don't know if you guys have your calculators ready, but if you're doing a 2018 tax return, that's the tax year. So 2018 minus whatever year that person was born. So let's say the person was born in 1980. How old are they for the tax year? 2018 minus 1980. And I'm sorry, what was your answer?
38.
Yeah, there you go. Everyone agree with that? Okay. All right. So now here's the exception. If you happen to be born on January 1st, there's a special rule that says they will consider you to be the age you are on January 1st of the new year for the end of the year. So somebody born on January 1st of 2019, excuse me, not born then, if they turned a year older, had been born on January 1st, they're actually going to be considered a year older than it would come out. So let's say in this same example that we had, you have a 2018 tax return, okay? And you subtract out the year they were born, 1980, but they were actually born January 1st. You would actually add one more. So it'd be the tax year minus birth year plus 1 if born on January 1st. So 2018 minus 1980 plus 1 gives us what?
39.
39. So if somebody was born January 1st, they're going to actually be considered 39. Why do they do that? Probably so that somebody's not always being considered for a full year, a year younger than they really are. Okay. So let's look at some examples of that. Julie was born on December 2nd, 1975. So we start with the tax year, 2018, and then we subtract out her birth year, 1975. 2018 minus 1975 leaves us with 43. So that's her age for tax year 2018. So far, does that make sense, guys?
Yes.
Okay. All right. Now let's look at an exception to the rule. Now here's Dennis. He was born in 1955 and he's filing a tax return for 2018. So here's the formula for him because he was born on January 1st. We start with the tax year 2018 minus his birth year 1954, and because he was born on January 1st, we add one more. So 2018 minus 1954 plus 1 puts him at age 65. Okay? Now, the reason I ask is I'd like everyone to always kind of give me feedback as we're talking. This is where being on a webinar is going to be a little more difficult. So if you got questions, you got to jump in and let me know. Get our attention. And Ryan's watching a lot of this to help me make sure if somebody's trying to get my attention and I'm missing it.
Yeah, and guys, just go ahead and put it in the chat if you guys have a question too, because I can see that immediately, and I can bring it to James' attention.
Yeah.
That's actually the easiest way to do it. Just type it into chat. That way we're not interrupting. You don't feel like you're interrupting. Type it into the chat, and I'll bring it up to James if we need to.
And if you do want to, I mean, if it's kind of a long question, you could always just say, I have a question, and then he'll let me know. Then we can unmute you and go from there. Just whatever works for you guys. So far, I think this is fairly fundamental. But if anyone has a question, I want to stop right there and make sure you got a chance to ask it. Otherwise, I'm going to move on. Okay. So we got a little knowledge check here. So before determining whether an individual is required to file a return, you need to know if they are male or female, or employed or retired, or renting or purchasing their home, or a U.S. citizen or resident alien. Ryan, what is the easiest way for them to answer?
Typically, just
chat,
they can
maybe even just answer the A, B, C, or D on the chat. What do you think?
Yeah, just put in A, B, C, or D on the chat.
There you go.
And what we'll do is, again, this is I'm going to send out a poll. We don't have these questions set up yet.
Yeah.
I just want you to see what it's going to look like.
Yeah.
There you go. This is one that we've used all the time. How many days are left in the season? Okay, this is how they work. And you guys could put it in there. We're going to do the same thing with the questions. Okay. Yeah. I don't have the questions set up. I'm going to get them from James ahead of time. But we'll be able to then ask those questions and have you guys interactively do it. And we'll see all the answers then.
Yeah. So don't worry about this particular poll. He was just doing that.
Yeah, I was just, by the way, I was just showing you so you guys saw how it looked when a poll came up.
Yeah. So for now, can everybody type in their answer, A, B, C, or D? What is the answer to this one?
You could also use E, I have no idea.
And I'm a little, we'll see if Amanda's able to do it on her phone. That might be a little difficult on the phone.
Yeah, the chat function, it's usually a slide to the next screen. I know that sounds a little strange.
Okay. And Amanda, I'm just waiting for yours. Are you able to do it? If not, Amanda, I'm just going to kind of let you off the hook for today on that to make your life easy.
So I'm trying to find it, but
then don't worry about it. Don't worry about it, Amanda. We'll just move.
Yeah.
The reason is I don't want to hang up on something small like this. It's not that
Yeah.
big a deal.
Yeah, don't
Okay?
worry about it. We'll work on it. Actually, I think that's one of the things we are going to do is maybe for our next session, I'm going to have a brief thing on using the phone as a connection thing.
There you go. All right.
I can everything just not.
Okay, so the answer is, oops, hold on a second. I got to get back to control here. The answer is D. So you guys had the answer right. Okay, it's a U.S. citizen, resident alien. So here comes the second question. U.S. citizens and blanks follow the same filing requirements. A, B, C, or D?
Resident alien. B.
Yep, you guys are right. Resident aliens. Okay, next question. Paulo is 17 years old. He was born in the U.S. His parents are ages 40 and 42, and they're both Australian citizens. And they were visiting the U.S. when Pablo was born. I can see they changed the name on this. We're going to say Pablo. They've all been living in the U.S. for the past 7 years. Is Pablo a U.S. citizen? Yes or no? Okay, the answer is yes. So, Rodolfo, you said yes. Tell me why you said yes to this.
Because he was born in the USA.
Right. There's a rule in the U.S. that if you're born on American soil, you are a U.S. citizen, even if your parents aren't. And that's why. And did we really cover that? No. But that's why you're going to find out a lot in material like this. You learn stuff through going through questions, because if we taught every little detail, you wouldn't remember it. You learn it through just interacting with the questions. So does that make sense, Noemi, why that's the answer is, excuse me, Amanda, does that make sense why that is yes? Go ahead and talk to me for a second.
Sorry. Yes. No. I was just messing with trying to find the chat thing. But
Oh, okay. No problem. Good enough. I just see her hands all over the screen. Okay, Gabriella was born December 22nd, 1991. How old is she for tax purposes for tax year 2018? And by the way, you should always have your calculators ready during this course. Okay, so I got Noemi's answer up. Rodolfo, waiting for yours. 27. Excellent. Good job. Okay. Donald was born January 1st, 1954. How old is he for determining whether or not he's required to file a tax return for 2018? So how old is he for 2018 tax return?
Ah, 65.
That's right. You're right. She corrected herself after she typed that. Yep, 65. Because remember, it's what you did before, plus 1, because he was born on January 1st. Okay, a taxpayer must have a blank to file a tax return. Now, we didn't actually cover this, but I think you guys know the answer to it. Must have which A, B, or C, or D?
My wife would say it has to be a spouse.
You guys are right. It's an identifying number. Now, an identifying number can be a Social Security number or an I-10 number, which is usually assigned to somebody who does not qualify for a Social Security number, or it can be an A-10 for somebody that you adopted that does not yet qualify for a Social Security number.
Hey guys, I'd like to point something out on this question. This is kind of like I said when I was in orientation, and I happened to mention the fact that one of the things that's really important about this test is a multiple question test, a multiple choice test, just like this. Looking at this question, you automatically know that we have a single filing status. So you know that a spouse can't possibly be it. You know that some people owe money, so it can't be a refund. that eliminated 2 of your answers. Okay. So if it's that leaves you literally an identifying number and a passport. At this point, you already, by eliminating those 2, you have a 50-50 chance of getting the question right just with that.
Yeah, just by eliminating the ones you know are not right. Yeah.
So that's one of the important things, that when you see a question like this, eliminate the ones that you know can't possibly be an answer. And it makes it a 50-50 shot at that point. And passport versus an identifying number. Well, the other thing you can realize, without ever doing anything, there are a lot of people who don't have a passport. So how can they do taxes if they don't have a passport? Now, I never once had to know the answer. I just eliminated the other 3. You know that in cases people don't have a passport, you know that people are not getting refunds, that there are people who owe taxes, and half the world, half the world's single. By doing that alone in that testing, I got the answer correct by just eliminating the other answers.
Yeah.
So
excellent. Good thing. And that brings a thought that I'd just like to mention to Ryan. Ryan, you might start keeping a list of little test taking pointers that near the end we could actually hand out just on a handout.
That's a good, yeah.
Like you just said, that because that's a good point. Okay. Got to get back to control here. All right. If a taxpayer is not eligible for a Social Security number, they can apply for a blank using a W-7. You're right. They can apply for an I-10 using a W-7. Okay, 8. Indicating the taxpayer wants $3 to go to the presidential election campaign fund will increase the amount of tax owed. That's A. B. Have no effect on the amount owed or the refund. C. Decrease the amount of the refund. Or D. Increase the amount of the refund. Now, some of this stuff we haven't actually covered, but make your best guess because, again, using reason, I'll bet you'll have an idea. And that's okay if you get it wrong even. It's not a big deal. That's why we're learning. So now I'm looking at answers. You guys are right. You all got it right. Have no effect on the amount owed. That is actually, you can designate $3 of your tax return, of the taxes you paid in to actually go to this. Okay, we're done with questions for a minute because now we're going to move into another part of the lesson called filing requirements. So what we're really asking is this person required to file a return or should they file a return? Those are the 2 questions you always want to know. So you've collected all this personal information, which we're going to show you how to use that in this section. You've collected this personal information. Now we're going to use that information to determine, does your client in front of you, are they required to file a return or should they file a return? So there's many things that come into play when determining an individual is required to file a return or should file a return. Okay, here's what you do. Steps to determine if an individual is required to file a return. First of all, identify the taxpayer's filing group. Don't worry about exactly what that means. Just know you've got to figure out which group that the IRS has created that your client falls in. And then you compare their situation to the filing requirements for that group. And this will make sense in a minute. So there are 5 filing groups or 5 filing categories. Here they are. Most taxpayers. This is the easiest one because like it says, most taxpayers fall in this group. But you also have ones that are called dependent taxpayers. What are they? They are somebody who's actually the dependent on somebody else's return. Most commonly, that's children, but you sometimes see it with parents who are living perhaps with their own grown children and being supported by them. You also have children themselves that might have to file a tax return in some situations. You also have self-employed individuals. And then you have aliens, which we've already talked what an alien is. Okay, so we're going to kind of go through those and see how this works. So first of all, I want to point out the first group we're talking about is for most taxpayers. This is where you'll spend most of your time in real life. So the filing requirements for most taxpayers, that category is based on the following factors as of December 31st of the tax year. Because remember, a tax year in most cases for individuals is going to go from January 1st and end on December 31st. So what are the things that we have to look at for this category? We got to look at your client's filing status. We got to look at their age, and we got to look at their income. Specifically, we got to look at something called gross income. So gross income, anytime you hear the word gross, besides meaning disgusting, it also means in accounting, it means just everything is included. So gross income includes all income that you received. It can be money that you received, like from working a job. It can be goods. Maybe you did something for somebody and they paid you in terms of like giving you something, like property or something like that. Or perhaps they did a service. So you did something for them, they did something for you. That's income to you. Now, there is some exception, one exception to this. It's all income that's not exempt from tax. Now, you guys haven't learned these rules yet, and that'll come in another session. But there are some things that the government will tax and some things that the government will not tax. Okay, we're not going to talk about what they are. Just know that some things, most things they're going to tax, but there are certain things they will not tax. If it's something they will not tax, it's not included in this person's gross income. And gross income, just to also be clear, includes both earned income and unearned income. So can someone, Rodolfo, can you give me an example of earned income?
So like money from your job?
Yep, that's earned income.
Okay.
Yep. Noemi, can you give me an example perhaps of unearned income? What one example of what that might include?
Investment.
Yeah, that's right. Investments, like you get interest from an investment or you get dividends or something like that. That's exactly right. So you want to include all that in there. But again, keep in mind, it's all this income that's not going to be, that is going to be taxed by the IRS. Do not include anything that's not taxed. So just looking at all this, filing status, age, and gross income. That's what you have to know for most taxpayers. And how do you use that? Well, on this screen, you can see that you've got to know filing status. Well, if somebody is single, now you got to know their age. Are they under 65 or 65 or older? Because if they're under 65, then their gross income has to be at least $12,000 before they're going to have to file a tax return. If they're 65 or older, it's going to be $13,600. So what does this mean? Let's say you have Jack, who's 59 years old, so he's under 65, and he has, say, $9,000 of gross income. Is he going to have to file a tax return? Yes or no? Go ahead and type in your answer into chat.
What's his income one more time?
$9,000.
No, he won't.
No.
No, and it's okay for you guys to speak up if you prefer to then not chatting. I just want to make sure you're catching it. So let's say somebody is there's a husband and wife, okay? They're both 30 years old and they've earned $25,000. So 30-year-old married couple earned $25,000, the two of them together. Do they have to file a tax return?
Yes.
Yes, exactly right. Okay. So that's how this works. And I know we have not discussed the difference between single and married filing jointly, married filing separately, head of household, qualifying widower. No, we haven't discussed what those mean yet. We're going to a little later today. But I want you just to know right now, this is all you do. Now, this is one of the things that I pushed out to you was a copy of the filing requirements chart. There's a copy in there that you can look at, and I'd encourage you to actually print that out if you can, because that'll help you. Just have that handy, okay? So before I take any more steps forward, does this make sense how this works for most taxpayers? Yes? Okay. All right, Rodolfo, make sense to you?
Yeah.
Okay, I'm slowing
Guys,
down.
really, make sure it's clear. This
Yeah.
is not a speed thing, and this is not a, oh man, she asked the stupidest question kind of thing.
No,
It's nothing like that, guys. If
Yeah,
you
'cause
have anything that's not clear,
yeah, that's right. Because guys, these are the basics. I'm going to tell you, if you get the basics down so you can get 90% of the basic questions right, you'll be able to pass a test, because the hard questions, you know, because there are going to be harder questions and easier questions. If you get the basics down so well, you'll do so well with the basics that that'll carry you over the rougher questions that might trip you up a little bit. Because we all have areas where we're strong or not. This is a basic right here. And I want to make sure you get it. So that's why I want to make sure to stop periodically and check in with you guys. Okay? All right. So taking another step forward, we're going to use an example here of this. So Tommy and Sandy are married and they live together all year. Their filing status is married filing jointly. So their age and gross income, Tommy is 27 years old, Sandy's 29 years old. There's their gross income. Tommy's is 9,251. Sandy's is 14,773. So what's the first thing you're really going to have to do? You already know their filing status, their ages. What are you going to have to do for their gross income to know what that is?
Add.
Yeah, you're going to have to add it together. That's right. So how much does that add up to? Can somebody do the math for us?
24,024.
I'm sorry, I was talking during part of that. Go ahead, say that again.
24,024.
$24,024. So, are they required to file a tax return?
Yes.
Yes, they are. And how do we know that? You come down here to married filing jointly. Filing, remember the three things you got to know: filing status, age, and gross income. Filing status, they're MFJ. They're both under 65 years old, and their gross income is $24,024, which is $24 more than the minimum requirement. So they're required to file a return. Okay? All right. So let's do a little bit of practice here, okay? This is where you might need to print out this sheet so you've got that sheet in front of you. So does anybody need, I need you guys to kind of speak up or let us know through chat. Do you have the ability to print it out right now or look at it to do these?
It's on the book, right?
You know, Ryan, I'm not sure if it's in that book. I'll be honest with you guys. I haven't looked at that book other than to make sure the material's in there. I can't remember. Do you know, Ryan?
I believe the table is in there. If not, we remember one thing is one of the study aids we have, and this is really, really important. It's Pub 17.
Yeah.
Okay, Publication 17 is from the IRS, and I actually have Pub 17 as a PDF document, so I'll push that out to you guys as well. I got to look it up here quick. But Pub 17 has all of the basic tables in it, and that's one of the things that you should always have available to you is IRS Publication 17.
Yeah. So yeah, no, that's a good point. So look, another thing you could do is just open it up on your computer and toggle back and forth and look at it. So, because we're going to take a few minutes. I want you guys to get this. This is really important. So William is single and he's 19 years old. His gross income is $10,356. Is William required to file a tax return? Now, you tell me what you need. If you need me to back up to that screen so you can see the filing requirements, I'll do that. You tell me what you need.
No. His gross income is below 12,000.
So what's the filing requirement for? In fact, let me do that. Let me just back up so we can see it. So he's single. He's under 65. His filing requirement's 12,000. So the answer is no. Okay. All right, so here's another one. Tommy is 57, Jen is 57. They live together all year. Their filing status, they're married filing separately. Tommy's gross income is $3,687. Jen's gross income is $22,492. Now, is Tommy, who's filing separately, required to file?
Yes.
Now, I'm just backing it up so we can look at it. Explain to me, now that I'm showing you that screen, why that's true. You're right, by the way.
Any age, $5.
Yep, it's more than $5 right here, and I'm just going to kind of mark it so you guys can see it. It's because of that requirement right there, okay? Okay, so Amanda, I want you to handle this next one, okay? So, Sonia is 42 years old and single. Her filing status is qualifying widower with dependent child. Her gross income is $25,765. Now, Amanda, do you want me to back up the screen so you can look at the filing requirements?
No, I'm okay.
Okay, you're good. So is Sonia required to file a return?
Yes.
You're right. Good job. Okay. So, Rodolfo, I'd like you to do this one, okay?
Okay.
Okay, so Greg is 68 and divorced. His filing status is head of household. His gross income is $19,150. Is he required to file? And do you need to see the filing requirement chart?
No, I'm okay.
Okay, good.
No, he's not required to.
No. And why is that?
Because he's over 65, so we have to pay 19,600.
Yeah, he has a higher filing requirement amount than somebody who's under 65. Yep.
Yeah.
Yep, perfect. All right. So, Rodolfo, while I got you on there, I want you to handle this one too, okay?
Okay.
Bobby is 102 years old and Rochelle is 100 years old. Good for them. Live together all year. Filing status, married filing jointly. Bobby's gross income is $17,305. Rochelle's is $9,620. Are they required to file a return?
Mm,
And you might need to do some math there for a moment, so we can wait. I don't expect you to give an answer till you run the numbers.
Can you show the table, James?
Hold on just a second, guys. I actually have a train going by, and it's kind of noisy on my end. Sorry.
One more time.
Okay, so what'd you say, Noemi?
Can you show the table?
Yeah. Rodolfo, because you're answering this, do you have those numbers down so I can move the screen here?
yes.
Okay, good enough. Let me get back there. I got to back up to the. There you go. So, Rodolfo, are they required to file a return?
Yes, they are.
Do you agree, Noemi?
Yes.
Okay.
It's more than 26,600.
That's right. That's exactly right.
Of course,
Okay.
if they've made it to be 102 and 105 and married for all those years, I think they should be given an exception, but, you know.
Yeah. That's funny, right? You say that. I've actually had an older couple in their 90s, and they said, do I really have to still pay taxes? No, they hadn't for a number of years because circumstances, and then I don't know exactly why it changed, but suddenly they started having potentially taxable income. And they actually came in and said, I heard that I might have to file a tax return, but I thought at my age, when you got 75, you didn't have to.
Yeah, there's a point, especially if they're married at 102 and 105. Somebody should be giving these people.
Yeah,
you know.
No, I agree, but unfortunately, the rules don't call for that.
Right.
Anyway, the gross income amount for filing requirements for most taxpayers does not include which of the following, A, B, C, or D? And put your answer up in the chat room, please. So gross income amount for most taxpayers does not include which of the following? Yep, you guys are right. Tax exempt interest. Okay, so that's that. We just went through the filing requirements for most people. 90% of your real life work that you're going to do for Jackson Hewitt, that's where most people are going to fall right there. Now we're going to talk about the other 10% with those. Remember, there were 5 categories we talked about, most people, independents, and so on. Now we're going to talk about some of the others. Okay, so now filing requirements for dependents. Now a dependent taxpayer is simply a person who can be claimed as a dependent on another person's return. Can a dependent have income? Yes. One example is you might have, if my mother is living with me and I'm supporting her, she's still getting Social Security, so she potentially has some income. She also has some retirement income. So could she potentially be my dependent and still have to file a return? What do you think, Rodolfo?
I believe yes.
Yeah, no, the answer is you bet. You can't assume just because somebody is a dependent that they are not going to be, have to file a return. They might or might not have to. They have special filing requirements. That's what this is about.
Mhm.
So if you have somebody that's a dependent, and you're putting them on the return, you might want to ask especially if it's an adult dependent, you might want to ask the parents, did this person have any kind of income? Because you might have to discuss that with them. So the filing requirements for dependent taxpayers are based on these factors. Okay. Remember, for other people, it was based on 3 factors. For most people, it was based on what 3 factors? Amanda?
Marital status, citizenship, and age.
Yeah, I didn't hear part of that, but I think you said marital status, age, and income. It's based it's not on your marital status, but your filing status. There is a difference. Remember, and the reason is marital status is basically married or single, but you can have somebody married filing jointly or married filing separately. So that's why it's filing status. Remember, for most people, it's it's filing status, age, and gross income. Right. So this is not a whole lot different for dependents. It's just a little bit more involved. This one says marital status. It's a little bit different. It's still age, and it still involves income. The last 3 involve income. Okay. But let's talk about this. It's marital status, the dependent's age, whether or not they're blind, because that's going to affect something that's a little different, and then their income. So you could still think of this as their status, their age, and their income with blindness. These are just different ways to think about it, just so you're getting all the right information. Now, notice in income, here's gross income. But for a dependent, we also have to look individually at unearned income and earned income. And remember, we already talked about unearned income and earned income. I believe it was Rodolfo that gave an example of unearned income as investments, interest, dividends. Earned income was given an example of like when you work for somebody and you get a paycheck. That's earned income. You add those 2 together to get gross income. So these are all things we're looking at. So when you have a dependent, you need to know if they're married or single. You need to know how old they are. You need to know if they're blind, because that just affects the amount. And then you need to know what kind of income they have. So it's still similar to most people. It's just a little more detailed. Let's see how this works. Now, that child can still be required to file a tax return, even though he's a child or a dependent, I should say, if they get above a certain threshold of earned income or unearned income. And I'll show that to you in a minute. So you got to find out their earned income and look at the amount. If their earned income is more than that amount, they have to file. Then you look at the unearned income, and if that's more than that threshold amount, they have to file. And then you add it all together, and if it's more than the gross income amount, they have to file. In that case, the child or dependent is going to be responsible for filing a return and paying tax. And if that dependent is actually a child or somebody that's disabled, the parent or guardian is going to be the one legally responsible to actually get the tax return filed for them. Okay? So let's see how this works. The dependent taxpayer's age is an important part of determining whether or not they're required to file a return. Just like it was for most other people, their age is important. Generally, the age of the taxpayer is their age at the end of the year. So is that any different than what we've already learned? No, it's not. It's the same thing. We're just looking at their age at the end of the year. So to determine whether a taxpayer is required to file a return, they're giving you the table number from Pub 17. This is why Ryan said a Pub 17 would be really, really good. I highly encourage each of you, after today's session, download a copy of that Pub 17 onto your computer and just have it available to pull up, okay? But you'll see the chart down here. My problem with this chart, and these PowerPoints were created by corporate, but so this is really hard to read, but that's why I sent that copy to you. But what you're going to always have to look at, and I'm going to kind of point it out, and if you can actually call that up, or if you've already printed it out, you can look at this chart B for dependents, and you'll notice the first thing you're looking at is you got to determine, is it a single dependent or a married dependent? And then you start answering questions. If it's a single dependent, do any of these special situations apply? Or do any of you have to file a return if any of these apply? So like, for instance, we're going to kind of look at it. It's going to be hard to read on the screen, okay? So you might want to use the copy I sent out to you. But it says, if you're a single dependent, you must file if any of the following apply. Your unearned income is more than $1,050, or your earned income was over $12,000, or your gross income was more than the larger of $1,050, or your earned income plus $11,600. Excuse me, I said that wrong. Your earned income is more than $11,650 plus $350. Now, guys, there are reasons for these numbers. You haven't learned enough about things called standard deduction to understand what all this means and why you're doing it. Just trust the chart right now. As you go further along, this will make more sense. Okay? So let's use an example. Okay? Natasha can be claimed as a dependent by her parents. So the question is she required to file? So here's the facts. Her marital status, she's single. Okay? Give me just a second here. Okay, so oops, sorry, I hit a screen I didn't mean to hit there. She's single. Is she blind? No. She has unearned income of $412. She's 16 years old. She has earned income of $518 in wages. So her gross income is $518 plus $412 is $930. So, Amanda, could you unmute? Are you able to see this well enough to work with it or not?
I got it zoomed in, you know, and it's all right. I can just about make
Okay.
out all the numbers.
Well, let's do our best. I'll feed to you. I want to kind of walk through this, and I just need one person to talk with me so we all can learn from it. So first of all, is she single or married?
I think you said she was single. I'm sorry.
She's single. That's okay. She's single. So she's going to be in the single dependent set of questions. So now let's look at those set of questions. You must file a return. Okay, first of all, there's a question there. Were you either age 65 or older or blind? So is she blind? Let's start there.
No.
No. Is she 65 or older?
No.
No.
No. So you check the box that says no, and you go through those tests that are right there in that set. So Amanda, are you able to see those 3 tests for that, a single dependent answering no to that question?
Yeah, yeah.
Okay, cool. So you must file a return if any of the following apply. So let's go through these together, Amanda. Your unearned income was over $1,050. Is her unearned income more than $1,050?
Was that the $930 that she had?
No, that's okay. Just because you can't see it that easily. Her unearned income is actually $412. So is that more than $1,050?
No. No.
No. Okay. So now her earned income is $518. That brings us to the second question here. Is your earned income over $12,000?
No.
No. So that does not apply. Now the third one, we have to find out what their gross income is. Well, it's added together for us. That's $930. Now, we have to determine if that's going to be more than one of these 2 amounts that are listed in this test. Is it more than, first of all, give me just a second, guys.
It's not going to be more than one.
Apologize, guys.
No problem. Take it.
Okay, so when you're going through this, you have to determine which is larger. Which is larger, $1,050 or her earned income?
The $1,050 is larger than her earned income.
Okay. Her earned income her earned income plus $350 is how much?
$1,280. It's gonna be over that. Oh, I'm sorry. It's not going to be over that.
Yeah, the real rule is you're taking her earned income and and adding $350 to it.
Gotcha.
So her earned income is $518 plus $350.
Okay, so $868.
Right. That's the first thing you have to do with a test like this. You have to find out what that number is. Now, it says here, which is larger, $1,050 or earned income plus $350. So which is larger, $1,050 or the 800 something for earned income plus $350? Which was larger?
$1,050.
Okay. Now that we got that, now we know which is larger. So we're using the number 1,050. So now the question is your gross income of $930 larger than 1,050?
No.
So on this question, none of those have applied to her. So is she required to file a tax return?
No.
No. Okay. So Noemi, did that make sense, the steps we went through? I want to make sure because this can be a little confusing with dependents.
Yes.
Okay, Rodolfo, were you able to follow the steps that we took there?
Yes.
Okay, good deal. I want to, before I go on to the next screen, I want to make sure to stop and ask any questions about this. Actually, this is the one that creates more confusion for most people than anything, because dealing with a dependent is kind of strange when it comes to filing requirements. So I'm just going to pause for a few seconds and give you a chance to speak up or send a something in chat to us if you want to ask a question or comment. Okay. All right. So let's go through a few practice ones. And let's do this as a group. Vashti is 67 years old, single, and blind. He is being claimed as she is being claimed as a dependent by her son. So she's somebody else's dependent. Her only income is unearned income of $3,751. Is Vashti required to file? So I'm going to have, Noemi, why don't you go ahead and handle this one first? Is she required to file?
And she is blind, no?
She is single and blind. Yes. So I didn't hear your answer if you gave one. I'm sorry.
Wait.
It's okay. It's exactly why we're slowing down for this one.
Yes, because unearned income is more 1,050.
Okay, it's actually answers no, but let's go through this together.
Okay.
Why? That's okay. So first of all, are you able to see the chart for dependents, Noemi?
No.
You're not. No, that's what's making this difficult, because what I sent out to you, you guys don't have printed out to look. So let's do this together. Let me back up to the chart, and we're going to do our best to see it together. So first of all, let's go through the questions for her. Is she single or is she married? So look on the screen.
Single.
Okay, perfect. So she's single. Give me just a second here. I was trying to see which one was easier to read. They're both hard. So she's single. So this is the step we're going through. Was she either age 65 or older or blind?
Blind.
Right. Okay. So yes. So we mark that box there. Yes.
Okay.
Okay. So far, so good?
Yeah.
Okay. So you must file a return if any of these following apply. Okay. So what was her unearned income?
3,000 plus.
Right. And notice what is her file? What is the cutoff amount, or the amount that the threshold amount? I mean, for her.
2,000. I cannot read.
I'm sorry, I didn't hear you.
I cannot read.
Yeah, that's fair. This is what's rough.
4250.
It is 4250. What I'm wondering is, Noemi, that PDF that I sent out to you, or can you call that up on your computer for a moment and just look at it? Forget looking at the screen my presentation. Rodolfo, could you do the same thing?
Yeah.
Okay, so let me know, Noemi and Rodolfo, when you get those up so you can see those.
Okay, I have mine up.
Okay.
I
And then you
cannot
want to go to the second page. Chart B is in boy for children and other dependents. And Noemi, do you have yours up yet or not? I couldn't tell.
What is the title of the download?
Okay. Make sure to save that, Noemi, somewhere on your computer
Yeah,
once it
I
downloads.
already say, but there is a lot.
Oh, it's okay. It's okay. I just, we're not in a big rush. It's important everybody gets the basics, because with the basics, then we can start building on it a lot easier and faster. So we're fine. And Amanda, while she's doing that, I'm assuming you're able to pull it up enough to see it on your phone. Am I correct?
Okay, I'm ready.
Okay. Amanda, are you able to see it on your phone? Okay. I think you could. Okay. Okay, so I'm going to go back to the screen where it had the information for her. Oops, went too far. Vashti. Okay, let's start over again now, Noemi. Okay.
Yeah.
Vashti is 67 years old, single, and blind. Okay. Unearned income of 3,751. So let's start here on chart B, the second page. Chart B is in boy for children and other dependents. Do we use the single dependents set of questions or the married dependents set of questions for this individual?
Single dependence.
Perfect. And what is the question next to single dependents? What does that say?
Were you either age 65 or older or blind?
So what is the answer to that for Vashti?
Blind.
Well, I mean,
More than
the answer is
65.
what? Right. So the answer is yes, correct?
Yes.
Yeah, she was one. She was at least one of those. So
Yes.
we check the box there for the yes box. Okay.
Yes.
Now, next to that, what does it say? Next to the yes box, what does it say?
You must file a return if any of the following.
Right. So for dependents, remember, we always go through the unearned income test, the earned income test, and then the gross income test. So what is her unearned income? How much did she actually have? It's on the screen.
3,751.
And what's the threshold amount for Vashti? You got to look down at the chart now.
4,150 if 65 or older.
Yes, and you're exactly right. And why do we use $4,250 rather than $2,650? As the threshold amount, I mean. Why do we use that higher amount rather than the lower amount?
She is more than 65 years old and blind.
Right, exactly. She's not just age, she's not just meeting the age requirement, she's meeting the blindness requirement. If she was only blind or only 65 or older, it would be $2,650. But because she's both, she gets a higher amount. Okay? So you're right. So the answer is no, so that doesn't apply. So what's the next line say? You're about the earned income.
9,400 if 65 older and blind.
I'm not sure where you're at. Remember where we're at on this. It's remember we're under single dependence, the yes box, and then the second bullet point. Do you see where I'm at, Noemi?
Sorry, I'm looking at my book. Okay, I will open your file. Maybe it's different amount. What amount?
I'm asking on this second, on the single dependence yes section. We're going through that chart.
More than 7,850.
No, I'm not sure what you're looking at. Are you looking at a printout of what I sent to you?
No, sorry.
Okay, you need to use that.
I'm looking at the book.
Yeah, I don't know I think your book's outdated. That's what I suspect.
Okay.
Okay, this is just important that you kind of understand this.
Yeah, okay, I will open. Sorry.
Because I'm walking you through this.
01C filing requirement charts. It's that the PDF. Okay.
Yes, that's correct. And go to page 2, chart B.
Okay. Okay. 15,200 if 65 or older and blind. Right?
Yeah, I don't know where you're getting that number. I'll be honest with you.
Huh?
Okay. Okay,
You-
start at
Your
the,
earned income was over 13,600.
there you go. That's the one.
15,200 if 65
There
or
you go.
older
Okay.
and blind.
Now we're on the same page. Good deal. So did she have any earned income? The answer is no. There's no, or it was only unearned income. Does that make sense?
Yes.
Okay. So now let's talk about her gross income. What is her actual gross income?
3,751.
Okay. So what is larger? And I'm just doing the next, I'm doing that next step. You take the larger of, for somebody who's 65, older, or blind, you take the larger of 4,250 or the earned income plus 1950. Okay. So does she have any earned income?
No.
No, she doesn't. So what's going to be larger? That $4,250 is larger, right?
Yes.
Okay, so is her gross income more than $4,250?
No.
No, it's not. So she has not met any of the requirements to have to file. That's how we get to know. Now, Rodolfo, we spent a lot of time going through that. Were you able to see those questions and how we got there?
Yeah.
Okay, and that's okay. That's why we go through it, because this stuff is not easy. And Amanda, how do you feel about that?
Very good.
Okay. All right, so let's just go on with another one. Amanda, I'd like you to help with this one. Sparkle is 2 years old and can be claimed by her as a dependent by her parents. She acted in some commercials before she turned 1 year old, and she earned $6,000 this year. So that's earned income. Some of the money was invested, and she paid dividends, and she was paid dividends of $1,057 this year, which is unearned income. Is Sparkle required to file a return? So take a moment, go through that, and tell me what you believe the answer is.
Can you go back to that screen for me so I can see the chart, because I don't have that printed
Yes, I'm memorizing these numbers, 6,000 and 1057.
I wrote them all down.
Oh, did you? Okay. I hope you can see that. That's the best I got for you at the moment.
Either 65 or older. No. Your unearned income was over 1,050. So, let's see. So she made more earned income. Yeah, she must file because her unearned income was over $1,050. Is that what that number is?
That's exactly right. So everyone's on the same page. What we're talking about is in the question. I'm going to do it up here on the screen, but if you have a physical copy of this printed out, or you can call up the electronic copy I sent to you, do it. All we're saying is she's a single dependent. She was, and the question is asked, were you either 65 years of older? No, she wasn't. She was 2 years old. Or blind. She's not blind. So the answer is no. We put an X in this box here. Then the question is, you must file a return if any of the following apply. The first one is, your earned income was over $1,050. In fact, her earned income was $1,057. So as a result of that question right there, she's required to file. See? Okay, Rodolfo, We're going to
Yeah.
do one with you.
Okay.
Ada is 66 years old and not blind. She can be claimed as a dependent by her granddaughter. Ada is married to Sal, who's 62 and not blind. And they are filing separate returns. Okay. Ada's only income is unearned income of $12. Sal's only income is earned income of $47,253, and he itemizes deductions. Is Ada required to file a return? There's a lot of info in there. And you know what? Let's walk through it together so we can all learn the reasoning, okay?
Okay.
First of all, is she single or married?
She's married.
Okay. So let's go down to married dependents. Were you either age 65 or older or blind? What's the answer to that?
Yes.
Yes. So we mark the yes box under the married dependents.
Mm-hmm.
Okay. And then it says you must file a return if any of the following apply. So her unearned income, let me just check something about this.
$12.
Yeah, I'm bothered by this question for a reason, because I'm not sure that they have the facts right to make this work. Give me just a moment. I apologize here. I'm going to skip past this one, guys. The reason is, and I apologize, I'm short-circuiting that question because there's a potential problem with that question that could confuse you. It boils down to the fact that they're trying to be tricky with saying they're married filing separately, but you have to include certain income. That's way more than you guys need to know for this, okay? So just kind of set that one aside and forget it, okay?
Okay.
Okay, so does this make some sense how to use the chart for dependents? This chart that we were talking about right there. I want to stop right now and give you a chance to ask a question about that. Any clarifying questions or anything like that? Okay. All right. I know it's a little confusing. Just keep in mind, always read the chart for what it says and then just collect the information. If you got to stop and back up and add something to figure it out, go ahead and do it. Okay. Now, in real life, you're going to do this sometimes because you're going to run into some of these, but it's not quite as complicated in real life. But for test taking purposes, you do have to know how to use this chart because you might, in fact, be asked to calculate one of these. Okay. All right. All right. Now, remember, we're talking about 5 different groups of people that might have to file with different filing requirements. We talked about the general group where most taxpayers fall. That was the easy one. Then we talked about dependents. Now we're going to talk just a little bit about a few others, okay? This one's purely for children. If a child's only income is interest and dividends and certain other requirements are met, parents can choose to include the child's income on their return. Now notice we did not say what the requirements need to be met. It's because we don't want you to get into it. It's too much detail for the purposes of passing. If you had to figure it out, you could go to a Pub 17 and read the details and apply it to the real life situation in front of you. Now, if you do have a situation where a child, the requirements are met, the parents can actually put that child's income on their own return. And in this situation, the child would not be required to file a separate return because it would be on the parent's return. And just to make it a little bit more confusing, they actually have messed with this rule underneath the new tax code. I'm not going to get into that because I just think it's too confusing and you're not likely to get asked any questions most likely about this. Just know historically a child in certain circumstances could include interest and dividends, and keep in mind it's only for interest and dividends. That's the only time it applied. If a child earned income, like for working a summer job or something, that cannot be put on a parent's return. This is only for interest and dividends. Okay? That's all I really want to say about that. Any questions about that or comments about that? Okay. Filing requirements for self-employed individuals. This is one you will actually run into in real life. A self-employed individual might be required to file a return, even if they are not required to file a return underneath, they say table 1 or 1-1 or 1-2. What they mean is, remember the general filing requirements for most taxpayers? A self-employed individual might, if you go through that set of tests and say, okay, he's not required to file a return, he still might have to file a return just because he meets a special requirement just for self-employed people. And what is that requirement? It's pretty simple. If they had net earnings from self-employment of 400 or more. Now, can someone define net earnings for me? Somebody just unmute and tell me what net earnings mean.
Income less expenses.
That's right. What does that mean? That means you take the gross income that you earn during the year and you subtract out all of your business expenses. That's what that means. Okay? So if you earned $1,000, if you earned a total of $1,000 from perhaps mowing lawns, for example, but you had $700 of expenses, what are your net earnings? Amanda?
I'm sorry, I was writing. What was the number?
Sure. $1,000 of gross income from mowing lawns, let's say, but you have $700 of expenses. What are your net earnings?
$300.
$300. In that case, would you be required to file a tax return?
No.
No, assuming you're not required to file for other reasons. Right. Rodolfo.
Yeah.
You with me? Okay, so if you've got, let's say you did $5,000 of self-employment income and had $2,000 of expenses, what is your net earnings?
3,000.
That's right. Would you be required to file a return if you otherwise had to file a return? Would you be required to file a return under this rule?
Yes.
Yes, because it's more than 400. Okay. Now, guys, for a church employee who's treated as self-employed, if a church employee has income of $108.28 or more, it works the same way. If they have that much or more, they're required to file a return, even if all they earned was $110. You know, underneath the general rules for most people, they wouldn't be required to file, but they are required to if they had church employment income of that amount or more. So a little bit weird, but here's the one. You're not going to run into the church employee hardly at all. You are going to run into this, though. So if you have a self-employed person that you're going through and you're determining, does this person required to file? Okay, you go through the general rules for most people and you say, okay, they're not required to file, but yes, Noemi. Give me just a moment to finish this and then we'll take a break, okay? Let's say we're not required to file because this person is under the $12,000 for most people that are single. But they still had $5,000 of net self-employment income. Because of this rule, they're still going to be required to file. Okay? Does that make sense? This is what I want you to plug in your brain. This is the number to really, really remember. Try to remember the church number too, because you might get questioned on this. In fact, there's a good chance you will be. That's all you got to remember. Okay, let's take a 5-minute break, bathroom break, and let's meet back here in just 5 minutes, okay?
Okay.
All right. And I'm going to stay on the screen in case anybody wants to ask a question or comment. I'll just stay here and stay available. Hey, Rodolfo, do you happen to be there?
Yeah.
Okay, I was just checking. Hey, I know this is all brand new to you. So far, I just want to find out from you, just check in with you. Is this kind of clicking?
Yeah. It's making sense.
Okay, okay. It's a tough thing because sometimes I don't know how fast or slow to go. Some things make sense to some people and not to others, and then we have different levels of experience too. Some
Yeah.
people are actually preparers that know this stuff already, but I'm still having to go through it.
Yeah, it's fine.
All right, good enough. Good enough. I was just checking. Amanda, I know you've been studying this stuff separately, so yeah, Amanda has actually been studying through a book for the last several months, and so she's already been introduced to a lot of this.
Okay.
So, all right, good enough. Still waiting a few minutes. So, Amanda, are you still with us, or are you on a break still? Looks like you're back, Amanda. Noemi's back. Rodolfo, are you back?
Yeah, I'm here.
Okay, cool. Okay, so let's go on to the next special filing requirement situation. Okay.
Wait, I have a message.
Oh,
I did not get
that's
it.
okay.
I'm not
No,
focused.
that's okay. That's fine. I see it now. Thank you for pointing it out. Regardless of whether a person, look, anytime somebody sits in front of you, the very first thing you want to do is see if they are required to file a tax return. That's the very first thing. You start out by applying the rules for all people, most people. Most people use that general filing requirement rules that we went over in like 2 minutes because it was so simple. Then when you get done with that, and if you say, okay, this person's not required to file, then you need to find out if they're self-employed. If there's any self-employment, we got to apply this $400 rule. Then you find out if they've been a church employee. And if they have been, you need to see if they meet the $108.28 rule. A self-employed person or a church employee that meets more than that amount has to file a return, even if they wouldn't otherwise have to file that. Does that answer your question, Noemi?
Yes, thank you.
Okay. Yeah, no problem. Any other questions? That was a great question. It's a great recap anyway. Okay. All right. So how about filing requirements for aliens? Well, if you're a resident alien, if you have a resident alien in front of you, they follow the same rules as U.S. citizens. So what does that mean? That means if you have a resident alien in front of you and they got to follow the same rules, you use the general requirements for most taxpayers. It's that simple. Okay? Oops. It's that simple. That's what you do. Okay? So you just go back to the first rule. If you have a non-resident alien, then there are some special rules, and you'll have to do a little bit of research, figure out if they have to file, and then how to help them file. In real life, you should probably not tackle one of these without some help the first time, just so somebody can guide you through it. Okay? All right. Then there's a few other miscellaneous situations where you might have to file. Okay, and we're just going to kind of talk our way through them. If you owe any special taxes, and I'm going to go through this list here with you, but I know you're not going to understand what they are. Some of them you might. If you owe something called an alternative minimum tax, then you might have to, then you're going to have to file a tax return. If you owe additional tax, like on an IRA or a 401k that you withdraw early, because there's an additional penalty assessed for that. So you owe a special tax for that. If you're a household employee and you pay household employment taxes, you're going to have to file a tax return, even if you would not otherwise be required to. If you're working as a waitress or something similar to that, where you get tips and you have tips that you didn't report to your employer, you have to pay Social Security and Medicare tax on that. So those have to be calculated and paid. So you're going to have to file a special return. If you're a first-time homebuyer credit with a recapture, that's about to phase out in a few more years. We're most of the way through that now. If you have any other type of special taxes that haven't already been taken out that you have to pay, you're going to have to file a return so you can report why you're paying these extra taxes. So the thing to remember here is you have to file a tax return if you owe any special taxes. Okay, this is just an example list. You also have to file a return if you had something like a health savings account distribution. In other words, you got a health savings account and you got some money given to you. Why do you have to file then? I'm going to tell you, it probably is not, you're probably not going to get taxed on this, because if you used it for medical purposes, it's not going to be taxable. You still have to report it so the IRS knows you used it for medical purposes. That's all. A lot of times these requirements are just to report to the IRS, hey, I got this money and I used it this way, so I don't owe any tax on it. Okay. Another reason is, and we already talked about it, if you had self-employment income of at least $400, net earnings of at least $400. We just talked about that one. Also, if you had church employment income of at least $108.28. We just talked about that one. Here's one that we've heard lately: advanced payments of premium tax credit. That's the Obamacare. If you were getting the government to pay part of your premiums, you have to account for that at the end of the year. And so you have to file a tax return if you did that, regardless of whether you owe or have money back or otherwise have to file a return. And that's what 5 and 6 are about. So look, as you can see, there are just some special situations for this. So what I think I want to do, let me do this here. I want to back up to our original. I want you to see the big picture here. So remember when we started this section about filing requirements, and I apologize, I'm going back several screens for this. We talked about these 5 categories. We said filing requirements for most taxpayers. Then we talked about dependent taxpayers. That's the one that took us so long with that special chart that was kind of confusing. Then we talked about children, that certain income, certain investment income for interest and dividends can, in some circumstances, be put on the parent's return. Then we talked about self-employed individuals and individuals that work for churches. We talked about aliens. And then just generally, we talked about a few other special exceptions. That's what we've spent the last hour going through, okay? And I just wanted you to remember what we're doing. Okay. Let me get past this. So while I'm doing this, are there any questions about those 5 categories? Any clarifications you would like to discuss before we talk about the next piece of this? Feel pretty confident with it? Nobody's answering. Okay. All right. Let's talk about others who should file. Remember, I said that when somebody sits in front of you, your first task is this person required to file? Then you ask, if you say no, they're not required to file, the next question you ask is, should they file? There are circumstances where a person should file. So even if a taxpayer is not required to file a return, they should file a return if they're going to get some income tax back. In other words, they had income tax withheld from like their paychecks, and they're going to get part or all of it back. Then they should go ahead and file so they can get a refund. Why? You don't want to give that money to the government. Another time that they could get money back, even if it wasn't from withholding of taxes from their paychecks, is if they have any of the refundable credits. Now, refundable credit just means a credit the IRS gives you that can result in a refund. That's the earned income credit, additional child tax credit, premium tax credit, and so on. These are ones that can result in a refund. So in short, you still want, even if you go through all the tests and find out this person is not required to file a return, you still probably want to file a return for them if they're going to get a refund, either from withheld taxes or from a credit. Make sense? Okay. So let's go through this. Marshall is 27 years old and not a dependent. He is a server. His filing status is single. His gross income is $9,271, and that includes unreported tips of $148. He owes Social Security tax and Medicare tax on that $148 because he did not report the tips to his employer. Is Marshall required to file a return?
Yes.
And you're correct. You're correct, Noemi. Why is that?
He owes Social Security and Medicare tax.
That's right. That's one of the exceptions. Regardless of other filing requirements, he has some additional tax. That's good. Tracy is 32 and not a dependent. He's single and is filing head of household. Her gross income is $10,105. She qualifies for the earned income tax credit and additional child tax credit. Let me ask the first question. Is she going to be required to file? That's not the question that's here. Is she required to file? Remember at the very beginning we talked about the general test for most taxpayers. Using that, would she be required to file?
No.
No, because she's under the filing requirement amount. But should she file?
Yes.
Amanda, why is that? Why should she file a return?
She's going to get money back for the she could get money back for the earned income tax credit and the additional child tax credit.
Yeah, actually, you can guarantee she will. If she has this amount of income, she's got a healthy earned income tax, or she's got some earned income tax credit coming. So absolutely. Okay, let's look at this one. Glenn is 61 and not a dependent, and Freda is 63 and not a dependent. They're married and filing jointly. Freda's gross income is $9,047. Glenn's gross income is $10,733 from self-employment. After subtracting expenses, and what they mean are business expenses, Glenn's net earnings from self-employment are $7,103. They have no other income. Are Glenn and Freda required to file a return?
Yes.
Okay, Rodolfo, what do you think?
No,
Okay, why do you say that?
because income is under
The filing requirement amount for most people. That's what you're saying, right?
yeah.
You're right as far as it goes, but remember some of the other special circumstances you got to look at?
Mm,
Remember the 5 groups we talked about? One of the 5 groups are self-employed people. What's the rule for a self-employed person?
okay.
It's okay.
Over $400.
Yeah, yeah. Remember,
Yeah.
if they have net earnings of $400 or more,
Hmm.
remember that? Then they
Yeah.
have to file, even if they don't otherwise have to required to file. So this brings up a really good point that once you go through the general test for most people, make sure, ask some questions. Is any of this income from self-employment? Is any of this income from church? Do you owe any additional taxes? You got to start thinking about, are there any other special circumstances that kick in? So you were right at Rodolfo as far as you went. You just forgot to apply some of the special circumstances.
Yeah.
So
Okay.
that's why they're required to file, is because of his self-employment. Okay. Next one. Nadia does not meet the filing requirements for any of the filing groups. However, she is still required to file a return if she
C.
Okay, I heard your answer. So we have 1 vote for C so far. I'm purposely not giving the answer yet, so I just want everybody to put in their vote.
C.
2 votes for C. Noemi, I'm waiting for your vote.
D.
Okay, she says that. Okay, I want you to know the answer is C, but remember, required to file a return. We're not saying should file a return. Owes additional tax on IRAs. It owes
Okay.
additional
Yeah.
tax, just like that other one that you answered. In this case, she should file a return because she's going to get a refund because she's going to qualify for refundable credit. But they were asking about requirements here.
Okay.
Okay, Young is not required to file a tax return. Which of the following is not a reason why he should still file to get a refund? So they're asking, all of these are reasons why he should, except for one. Which one has nothing to do with it?
E.
I'm sorry, which answer was that?
D.
B is in Bravo? Is that what
D
you're
is in
saying?
dog.
Oh, D is in Delta. Okay,
D.
dog.
D.
Okay. Yeah, you guys are right. It has no unearned income. All of those reasons there, federal income tax withheld will be refunded. That's a reason to still file a return, even if you don't have to. Part of the federal income tax withheld will be refunded. That's a reason to file. He qualifies to claim a refundable credit. That's a reason to file. It has nothing to do with unearned income. Okay. All right. So guys, we haven't taken a lunch break. My question, this is your thing. This is your training. We still have to go through some filing statuses, and we promised, we kind of got off to a late start because we spent a lot of time going through whether or not, how to use the program. So my question to you is, and I just want your opinions, do you want to take a break or do you just want to keep pushing through to 2 o'clock? It's up to you. Don't want to overwhelm you, but I want to give all of you a chance to take a break if you feel like you need a 30-minute break for a lunch. It's totally up to you.
Yeah, guys, it's up to you. It's how fast you guys are learning it.
Yeah,
It's not
yeah.
not necessarily us. It's
Exactly.
I mean, if it's overwhelming at this point and you want to take a break for a little while, we can. If not, we can keep going right on through.
So,
I'm fine. Just keep on going till 2.
okay.
Okay.
One. Was that Noemi that said okay?
Uh-huh.
Yeah.
It was kind of an okay.
Yeah, that was kind of hesitant because if anybody wants a break, we're going to take a break. That's what the key is here. So
Yeah.
don't feel pressured because we're in this together. We're all going to work through this together.
Amanda will decide.
Amanda decide.
Okay, Amanda.
It's up to you, girl.
I'm good, really. I've been studying this stuff for a while. So.
Okay.
Okay.
Okay, so let's just keep moving forward.
Okay.
All right. So now what we've discussed so far is just some general information you need to collect, and then the second part of it was how do I take this general information and use it to decide if the person in front of me is required to file a return or should file a return. Now we're setting that aside and saying, okay, how do I take that information that I collected and determine which filing status that they're going to fall under? Now, why is that important? If you look at this list of filing statuses here, you'll notice that each one of these were used in determining whether or not a person was required to file a return. So you'll see a lot of this stuff that you learn affects something else that you learn, and it's going to be like that for a while, okay? But this will get easier as you learn it, and I know some of you already know this, so forgive me for going slow, but I'm trying to make sure that everyone understands this, even the people who have never been exposed to this before. So there are 5 filing statuses: married filing joint, married jointly, married filing separately, head of household, qualifying widower with dependent child, and single. Okay, we're going to talk about what's required for each of them. So again, married filing jointly, married filing separately, head of household, qualifying widower with dependent child, and single. And we commonly call married filing jointly MFJ, married filing separately MFS, head of household HOH, qualifying widower with dependent child just QW or qualifying widow, and then single. Okay, so let's talk about each one of those individually. To determine, the first thing you have to determine is the person's marital status. You got to find out if they're married or not, and there's some technical definitions on what constitutes being married or not being married under IRS law. So you first have to figure out if they're married. Now, anybody who's legally married at the end of the tax year is considered married for the entire tax year. Okay, so all couples who are legally married are considered married for federal income tax purposes. Even if it's a gay marriage between a same-sex couple, it's treated the same as a marriage between a man and a woman. Now, some states, including Oregon, still have civil unions. They call them domestic partnerships in Oregon, but they still have these. Those are not the same thing as a marriage. It has to be an actual marriage with a marriage certificate involved. Okay? If you're married as of the last day of the tax year, December 31st, then you're considered married for the whole year. So if you got married on December 30th, you're considered married for the whole year, even though you're only married for 2 days of the year. Now, depending on their marital status, a taxpayer may use that for more than one filing status. So a married person can potentially actually have 3 different filing statuses depending on the circumstances. You'll see that in the next couple of minutes. Okay? So, what does it take for somebody to be considered single as opposed to married? A taxpayer is single if on the last day of the tax year they have never been married, or they are divorced, or that marriage has been annulled, or they are legally separated from their spouse. In other words, they went to court and got a legal separation even though the marriage is still intact, or they became widowed. In other words, the spouse passed away in a prior tax year and they've not remarried. Okay, so if somebody passes away, let's say you're married, and let's say you've been married for a number of years and your spouse passes away in 2018, you're actually considered married for all of that year, even after the spouse passed away. But for 2019, you're going to be considered single as long as you have not remarried. Okay? Now that's pretty straightforward. What does it take to be considered married? Well, we kind of covered this. You have to actually be married by it's whether or not you're married at the very end of the year. It doesn't matter if you got divorced, if you were married and got your actual divorce papers went through on December 31st, then you're considered single for the whole year because you're now divorced. So they have to be legally married, meaning it has to be recognized by a government, you know, and it doesn't have to be married in the U.S. It could be married even overseas, as long as it's a marriage that our government recognizes. They are living together in a common law state where it's recognized by the state as a marriage. You don't run into that a whole lot anymore because most of our states simply don't recognize common law marriages, but it can happen. Or their spouse died during the year. Remember that example I just gave? Spouse dies during the year, you're still considered married for the whole year. Then every year after that, you're considered single as long as you have not remarried. Okay? So why am I going over these two, single or married? Because we got to figure out what it means to be married under IRS tax law. Once you know whether or not your person's single or married, now you can start figuring out which filing status to use with them. So let's go over a few questions. Carl and Cindy were married on December 31st of the tax year. Which of the following statements best describes their marital status for filing status purposes? Can you put up your answers in the chat room? A, B, C, or D? And let's see, who am I? I got Rodolfo's and Noemi's. Amanda, if it's C. Oh, there it is. Yep, you guys are right. It's C. They were married at the end of the year, so they're considered married for the whole year. Perfect. Jose's wife, Juanita, died on June 19th of the tax year. He is not remarried. Which of the following describes Jose's marital status for the filing status purpose? Is he single, married, unmarried, or legally separated for that tax year? Yep, you guys are right. He's married. Under which circumstances is Katie considered married for filing status purposes? Go ahead and read through those and answer on screen, A, B, C, or D. D. Okay. Who wants to pipe in and tell me why D is the correct answer? No one's going to pipe in and try it? Amanda.
She's married to him, no matter what, even though she hasn't seen him in a long time.
Okay, so I only heard part of that. Could you try one more time? Sorry.
She's still married to him. In all the other ones, she's technically divorced.
No, that's right. Yeah, that's right. She's not divorced or legally separated from her husband. But she hasn't talked with him in 15 years. That doesn't matter. She's still legally married.
Right, unless it actually goes to court. That's the only time it would actually be considered a separation. So yeah, so they're, for all intents and purposes, they're still married.
Yep, and they have to take that into account when they're deciding which filing statuses they can use. That's exactly right. Okay, good. So now that we know how to determine if somebody's single or married by definition of IRS law, now we can look at the filing statuses. First filing status is married filing jointly, MFJ. Taxpayers who are married by definition can choose to file a tax return that combines all of their income together and all of their deductions into one joint return. When you make this choice, that's called married filing jointly. And how do you do it? You just simply mark the right section on the Form 1040. We're not going to go into that a lot right now. Just on the Form 1040, you mark MFJ, the married filing jointly, and then you put in the personal information for both spouses. That's what you do, okay? Now, what about married filing separately? This is another option, and this is a different option for married couples. They can file, and I'm jumping back for a second, they can file jointly or they can file separately. MFS, married filing separately, is a filing status available for married taxpayers who either choose to file separate returns or cannot agree to file their return jointly. Now, there are a number of situations where a married couple might want to file separately. Sometimes they can come out better tax-wise if they do. That is usually not true, though. Okay. Married taxpayers who file separate returns assume their own tax, their own interest, their own income, their own penalties for items on the return. In other words, I'm going to say husband and wife just to make this simpler to explain, but say husband is going to put only his own income. He's going to assume his own taxes. He's going to assume all the liability for his own return, and so is his wife separately. Now, if one spouse chooses, this is the third bulleted point there, if one spouse chooses not to file a joint return, the other spouse is forced to file a separate return also. Now, usually, filing MFS is not as advantageous as filing MFJ. The reason is because when you file married filing separately, you lose a bunch of the credits that you would otherwise get. You lose, for example, earned income credit. You're not going to get earned income credit if you file separately. You're not going to get some of the education credits if you file separately. These are all things that you lose. But in some cases, it won't matter. If the person's circumstances are right, they might want to file separately and it won't make any difference to them. I mean, financially, it won't make any difference. Here's what's important to remember. You have two options. Married person can file jointly or they can do married filing separately. And usually married filing separately is less advantageous than MFJ. That's what we got to learn here. Okay, before I go any further, what are the two filing statuses for married people?
Married
filing.
Go ahead, Rodolfo. Go ahead.
Married filing jointly and married filing separately.
Perfect. All right. So let's do a little quick quiz here. Andrew and Karen's divorce was finalized on November 30th of the tax year. Which filing status do they qualify to use? Amanda, which one do they qualify to use?
Married filing separate?
This is kind of a trick question. No. Look at it again.
So they could do either one?
No, this is a trick question. Neither.
Oh, okay.
They can't marry. They're divorced.
Yeah, they're divorced.
they're
They
single.
can't do anything with married in it. They're divorced.
Unless they got remarried after that to somebody
exactly
else.
Right. Yeah, that's exactly right. Unless they got remarried. So that's kind of a trick question. That wasn't fair, was it? All right. James and Clara were married 5 years ago. They have lived apart since last year, but they are not divorced or legally separated. Amanda, I'm going to give you another chance. Which filing status do they qualify to use?
These are hard. Married filing jointly? Because they're still married.
Okay, but the question is, which filing statuses do they qualify to use?
Right.
Well, they do qualify to use married filing jointly. Is
So
that
then
all they qualify?
They could use either one.
Yeah, there you go. Either of them.
Perfect.
Keep in mind, people can choose which way they want to file, as long as they meet the requirements. And that was the key right there. Okay, Noemi, can you handle this one? Ben died on November 29th of the tax year. His wife, Marie, did not remarry. Which filing status does she qualify to use? And again, remember, there can be more than one filing status in some cases. No, I don't know if you're talking, but we can't hear you because you're muted.
Married filing jointly.
Okay. Is that the only status they qualify for? Or she qualifies for?
Either.
Yeah, either. You're right. I don't know why she'd want to do it, but there still could be circumstances where maybe she'd still file separately from her deceased husband.
Now, remember, guys, there's an important thing, too, to consider. Remember that married filing separately? If one person files married filing separately, the other one is required to.
Yeah.
So let's say you are separated on that previous question where they were married for 5 years,
There
5
you
years
go.
ago, but they haven't seen each other for a while. And the wife decides she's going to go in and file married filing separately because she doesn't know where he's at. Well, he may go, hey, look, we filed married filing jointly all these years, and I want the benefits of it. If they're not talking, they don't know that, and one may file married filing jointly, and one may file married filing separately, and that's going to be a problem.
Yep. And in real life, Ryan and I
It
know
happens.
this. In real life, we might have a client sit down. You might have a client sit down in front of you and says, yeah, I just file with her. And so they try to do it, and suddenly it gets rejected because she's already filed a return, and your client in front of you is like, what? You know, so those things can happen. Okay. All right. So now let's talk filing status for head of household. I have two different ways to view this. I'm going to go through the screen. I'm going to go through a short set of slides here, the way our corporate division likes to teach it, because it really is helpful for some people to think of it this way. And then I have a couple of slides of my own that I slip in here that describes it a little differently. It's just two different ways to look at the same object or the same filing status. Head of household can be a little confusing because there's some specialized rules in there, okay? Now, one thing to help you is that's one of the handouts that I sent to you at the beginning of this. I sent you one that was called Head of Household, or HOH, okay? So you might want to print that out if you got the ability to right now, and if you don't, you might want to call it up in a little bit, but I would hold off right now. I'm presenting this both ways because, you know, we all learn a little differently, and sometimes it's a good idea to present it one way and then present it another, but we're going to cover the same rules, just look at it a little bit differently. So let's look at it this way first. Certain taxpayers who pay more than half the cost of keeping up a home, and I want to stress that, more than half the cost of keeping up the home during the tax year may be able to use head of household as their filing status. Now, what if you have two or more people, let's say two people, and I've seen this in real life, two mothers, they decide, you know, with their own children and everything, they decide, they're both single, they decide to get together and like rent a house together, you know, because it's actually cheaper than each of them renting their own separate apartments, and then they got a whole house. I've seen this many times. If you have a situation like this, two people living in the same household cannot both claim head of household filing status. Why is that? Can someone, I would like one of the three of you to unmute and tell me, based on what you're seeing of the definition there in the first bullet point, why two people in the same household cannot each claim head of household.
Two people can't be paying more than half.
Sorry, Amanda?
Two of the people can't be paying more than half.
Right. That's the reason why. The key words is more than half. Two people cannot pay more than half because it's impossible to go over 100%. Okay? So only one of them can pay more than half. So in a situation like that, only one person can claim head of household. The other person can still claim their children and everything. They just can't claim head of household filing status. Okay? And a taxpayer must have a qualifying child or must be claiming someone as a dependent to use the head of household filing status. So they not only must pay more than half the cost of the home, but they must have somebody they can qualify on their return, either qualifying child or somebody they can claim as a dependent. Okay. Now, this worksheet is in there just to show you kind of how you would figure out more than half the cost of keeping up the household. What you do, first of all, let's start and take a look at the things that are considered. Property taxes if you own the home, mortgage interest expense if you own the home, rent if you're renting a home, utility expenses, repairs and maintenance you might have on the property, insurance you pay on the property, food eaten in the home, other household expenses. Those are the things that are considered. And notice what's not on there. Educational expenses, travel expenses like commuting expenses, entertainment expenses, stuff you buy for the house that are in terms of like a TV or something. Those are not things you get to include. We're talking about actual cost of supporting people that live in the home, and it has to deal with the home directly and what happens in the home. Those are the only things you consider in this. So what you do is you make two columns. You make a column of the expenses that you're paying and then the total expenses. So just for an example, let's say that you are sharing a house with another person. You'd put down the rent. The total rent is, say, $1,000 a month. And how much of that are you paying? Are you paying only $500 or are you paying $600 of it or something? You just do that all the way through, and then you add it up and you compare it. And you see which one. Actually, you don't quite do it that way. You add them up, then you subtract the difference, and that this is the amount others paid, and then you compare it to the total amount you paid. Whichever ends up being higher, that's who can claim the head of household. Okay, this is actually kind of a handy thing to keep actually in a drawer when you're doing tax returns, just to kind of do a quick down dirty quick way to make sure the person qualifies as head of household if they're going to take it. Does that make sense how we get that?
One of the big ways to actually figure out if it's one of these things, it has to be something that involves your actual survival, your actual living. In other words, it's not something you choose to do. You choose to get Netflix, but you have to eat. Okay, you have to have You have to have heat. You have to have shelter. Those sort of things.
Yep.
So that's the determining factor.
Yep, that's exactly right. So, and by the way, you don't have to use this worksheet. That's not required. If you can remember what's on there, you could just do it on a scratch piece of paper. It's the same thing. But you want to do it. And one thing I want to point out is, let's say you are living, or you have a client that is living with somebody and sharing expenses. Let's say everything is 50-50. Who would get to claim head of household? Rodolfo, can you give us a guess? Remember, everybody's sharing it 50-50. So who gets to claim head of household? And I'm bringing this back up because I want to stress again, look at the definition. See that?
Yeah. So
yeah, go ahead and make a guess. It's okay. It's okay. This is how we're going to learn.
So neither of them?
You're right. Neither of them can, because neither of them paid more than half the cost. Right. It has to be more than half the cost. So it's really critical. Let me tell you where you really run into real life situations where this can happen. It usually happens when two parents get into a relationship with each other and move in together. So I'm going to talk about a man and a woman, but believe me, this happens with same-sex couples too. They both have kids, they move in together, and they're splitting up the cost evenly. The best advice you can ever give them is one of them should pay a little bit more on some item just to make sure it's more than 50%. That's what they need to do to make sure to make this work. Otherwise, they're both going to come out losing on this. And there is a reason why it's more beneficial. You don't know why yet, but it's more beneficial to file head of household than it is to file single, because you're going to get to deduct more if you do it this way. So, okay, but that's just information for later. Okay, so we're still talking about filing status, the head of household, but we're focusing now on how about single taxpayers, people who are single that want to file head of household. What does it take for them to file head of household? Well, in addition to paying more than half the cost of keeping up the home, a single person must meet at least one of the following criteria in order to file head of household. First of all, they must live in the home for more than half the year with a qualifying child. Okay, so qualifying child, we don't know exactly what that is. We'll touch on it, but we'll get into it later when we talk about dependents, but we're going to touch on it later. But for now, just know if you got to have a qualifying child that you lived in the home for more than half the year. Normally, you would claim that person on your return, but there is an exception in some circumstances where you might not actually claim that child as a dependent on your return. For example, you gave the other parent that you're separated from, you gave that person permission to claim the child on his return. That may be an example where you might not claim the child on return, but that child still has to lived with you in your home for more than half the year. Okay? Or you live in the home with a qualifying dependent for more than half the year. Notice that's different than a qualifying child. A qualifying dependent has a more general definition. There's more people that can potentially qualify here, but you must have lived with them for more than half the year. Or you must provide more than half the cost of keeping up the main home where your dependent mother or father lives. Okay. Now, this is one of those exceptions. Notice where a parent does not have to live with you for more than half the year. They can live somewhere else, but the parents are the only exception to not somebody who doesn't have to live with you. But in that case, you have to still provide more than half the cost of keeping up the home where that parent lives. Okay. Now, these are all rules for a single person who wants to claim head of household. They must provide more than half the cost of keeping up the home. They must have a qualifying child or a qualifying dependent that lived with them for more than half the year, and they must, or they must have a parent that they're supporting that they provided more than half the support to. Okay, so for single people, does this kind of make sense? I want to stop again and ask that question. I want to, if you need clarification, now's the time to jump in and let us know. Okay, so now I'm going to move into a little bit more information. A qualifying child can be a taxpayer's child, and that can be like a stepchild or a foster child or a descendant of such a child, such as a grandchild. So a qualifying child, remember we were talking about for a single person has to have a qualifying child. That can be their natural child, or it can be a stepchild or a foster child. By the way, a foster child has to be legally placed by an adoption, or excuse me, not adoption, by a legal agency or a court for it to be considered a foster child. Can't just be somebody who just happens to live in your house, or a descendant of one of those children. So a grandchild would qualify. And a qualifying dependents are individuals who are related to taxpayers in one of these ways. So remember, qualifying child, back here, I'm backing up again because this is what gets confusing. We said you have to have a qualifying child or a qualifying dependent. This is the definition of a qualifying child. Basically, it's your natural child or a stepchild or foster child or a grandchild. What about for a qualifying dependent back here? Can be a qualifying dependent. What is that definition? Well, it's broader. It includes a brother or sister or stepbrother or stepsister of yours, the taxpayer, or it includes your parent or a grandparent or other direct ancestor of yours. It includes your stepfather or stepmother. It includes your aunt or uncle. It includes your nephew or niece. And let's just say it includes your in-laws, father-in-law, mother-in-law, son-in-law, daughter-in-law, brother-in-law, sister-in-law. Okay? So that's all this screen is doing is defining what a taxpayer's child is and what a taxpayer's dependent is to qualify. And again, keep in mind, this is only for a single person that's wanting head of household. Does anybody want to make any comments or need clarification on these definitions? Okay. Now, we've been talking about a single person who wants to qualify as head of household. What about a married taxpayer? Can they sometimes qualify for head of household? I'm going to answer that for you. The answer is yes, if they meet specific requirements. So a married person actually has a third option. Normally a married person is MFJ or MFS, but they can be head of household if they meet certain requirements, and that's what we're going to talk about right now. Taxpayers who are married but did not live with their spouse at any time during the last 6 months of the year. So that's the first piece right there. If they're married, they cannot have lived with their spouse at all during the last half of the year. If they did, they cannot qualify. But if they did not, they might be able to qualify for head of household filing status. These are the other requirements that must be met in order to do that. They must file a separate return from their spouse. They must live, well, we just talked about this, they must live apart from the spouse during the entire last 6 months of the tax year. They must provide more than half the cost of keeping up their home for the entire tax year. And we're talking about their separate home, separate from the spouse, other spouse. They must have lived in the home for more than half the year with one of the following: a son, daughter, stepchild, or foster child who is their dependent. In other words, what they're saying is somebody who you can actually claim on your return, or a son, daughter, or stepchild, notice not including a foster child, who is being claimed as a dependent by a non-custodial parent. So the other parent might be, the person had to have lived in your home for more than half the year. The son, daughter, or stepchild have lived in your home more than half the year, and you might claim them, or you might be able to have given the other parent the right to claim them on the return. But if it's one of these three and they lived with you more than half a year, that's the requirement to be able for a married person to claim the to claim head of household. However, if they have a foster child, they have to be able to claim that person on their return. Before I get on to the next screen, I want to stop right there. Again, some detailed rules there, and I go through them pretty fast. They're not complicated usually, but they're kind of confusing.
Guys, now remember, there is one major rule there. That word that says last 6 months. Because there are a lot of people who assume that it's any of the 6 months throughout the years. It has to be the last 6 months. So December 31st, they have to not be living with them. You know, some people say, oh, well, I didn't live with them for these 6 months. Well, no, it has to be the last 6 months. And that's what
of the tax year. Yep. No, that's exactly right. They cannot have lived. Look, let's admit it. For most people, they're using a normal tax year, meaning a calendar tax year, January 1st through December 31st. That means they cannot have lived with them from July through the end of the year at all. If they do, they cannot use head of household. They're going to, a married person in that situation would have to use which filing options would be available to them. If they can't use, if a married person cannot use head of household, what filing options are available to them? I think, Amanda, go ahead. I think you were trying to answer.
Married filing separately or married filing jointly?
That's right. MFJ, married filing jointly, or MFS, married filing separately. Those are the only other options left to them. Okay. Any questions about that? So let's talk about due diligence. Due diligence is critical. Because there's some tax advantages to filing head of household, the IRS requires you, as the tax pro, to be acting in a reasonable and prudent, as a reasonable and prudent individual. That includes asking questions to reasonably determine the marriage status, the living arrangements, relationships of a dependent, and costs of keeping up a home. This is critical. There are penalties associated with not doing your due diligence. And they can even stop you from filing tax returns for other people if you fail to do due diligence. So you've got to ask questions. You've got to ask the normal questions, and you got to take some notes to be able to prove that you did that. Now, the Tax Cuts and Jobs Act, which is the recent one, imposes a penalty for each failure on a tax return preparer who fails to comply with this regarding head of household. And there is an actual form that's filled out. I'm not sure if I put it in, I slipped it in here, I can't remember, but there's an actual form you fill out, and it makes it real easy to do it. You just answer about 3 questions, and that'll take care of it. And in real life, using our software, the questions are built right into the software. You just have to answer them. That's it. But you do have to ask the questions of the preparer, excuse me, of the client, and you do have to make notes about it. Okay? Okay, I'll come back to that. So any questions about due diligence requirements? Okay. So what I'm going to do is, this is where I'm going to jump into a different way to look at it. I have 2 slides, and it corresponds with that handout that I have that I gave you, and that's more for you to be able to print out and save. I personally think this is a little easier to understand, but it's totally up to you. It's just a different way to keep everything straight. So let's talk about it. General requirements for head of household. General requirements, you have to have all of the following. First of all, you must have a qualifying person. Notice I'm using a generic word, person. You must have a qualifying person that lived with you more than half the year, except for parents. They're the one exception to that. They don't have to live with you more than half the year. You must have provided more than half the cost of keeping up the home for a qualifying person. So again, more than half the cost of keeping up the home, more than half. Okay? And you must be either unmarried, in other words, single, or considered unmarried. Okay? You must either be unmarried or considered unmarried. And we'll look at the requirements below for being for each of these. So those are the general requirements. Have a qualifying person that lived with you more than half the year, except for parents. Provide more than half the cost of keeping up the home for your qualifying person, and you must either be unmarried or considered unmarried and meet the requirements for either one, whichever one you qualify for. So let's look at the unmarried requirements. After you meet the general requirements, let's look at the unmarried requirements. You are not married, unmarried in other words, or single, and one of the following must be met. You must be able to claim on your tax return a qualifying child. Now, these are my definitions I like to use, and I think you'll find them a little easier to remember. What's a qualifying child? What does that mean? That's any variation of your child or descendant therefrom. Okay, I must kind of go over that again. Any variation of your child, what does that mean? Child, stepchild, foster child if legally placed, adopted child if legally adopted, or a descendant therefrom. A descendant from any of your child is a grandchild. That's it. If you can remember that, you'll get this right. Now, the exception for this is, notice I said you have to claim on your tax return a qualifying child. The exception is for divorced or separated parents. When you're divorced or separated from the other parent, you don't actually have to claim that child on your return if you gave the other parent the right to claim the child. That's the one exception to claiming your qualifying child on your return. Okay? So you have to meet one of these. You have to either claim on the tax return a qualifying child, or you have to claim on a tax return a qualifying relative. What is a qualifying relative? Here's the definition I use. Any variation of your child, sibling, parent, in-laws, or descendant therefrom, or aunt or uncle. So let's walk through that real fast. Any variation of your child. Well, that's the same thing as the other definition. Stepchild, actual biological child, stepchild, foster child, so on. Your sibling, that's a brother or sister. Your parent, that's your mom or dad. Your in-laws, mother-in-law, father-in-law. Descendants from any of these, like a grandchild. Your nephew or niece is a descendant from your sibling. Descendant from your parents would already be your sibling. Dependent from your in-law, descendant from your in-laws would be like a brother-in-law or sister-in-law. Or your aunt and uncle. So it's just a different way to define these that gets rid of that long list if you can categorize them. But you must be able to claim, notice a qualifying relative, you have to be able to claim on your return. There is no exception for that. Now, we talked about unmarried requirements for single people. What about somebody who is actually married but wants to be considered unmarried? What are those requirements? Well, it must be all of these. First of all, you must be considered unmarried. How are you considered unmarried? Well, you're filing separately from your spouse. You cannot file a joint return with your spouse and be considered unmarried for head of household. So, filing separate from your spouse and did not live with your spouse in the last half of the year. And again, just like Ryan, stressed there, notice the last entire half of the year. You cannot have lived together. So you cannot file together and you cannot have lived together in the last half of the year. So that's the first requirement. Second of all, you provided more than half the cost of keeping up the home for yourself and your qualifying person. So we've seen this again, but again, more than half the cost of keeping up the home, both for yourself and this qualifying person who's living with you. And you must have a qualifying person, but a qualifying person in this situation has a slightly different definition. It must be a child or stepchild. Notice again, usually you can claim that person, but if it's a child or stepchild, you do not have to claim them except for a divorce and separated parent situation where you let the other parent claim that child. But that's only for child and stepchild. Or a foster child. If you have a foster child, you must be able to claim that person as your dependent. So notice how much more restrictive an unmarried person who's married that wants to be considered unmarried, notice how much more restrictive it is of who you can claim. You can only claim a child or stepchild or foster child. That's it. Otherwise, you cannot be married and be claiming head of household. Okay, that's my slide, the way I define it. I want to give you a chance now that you've seen a little bit different way to think about the rules. Does this help you kind of make sense out of it? Do you think you can work with this with a few questions in a little bit? So I want to give you guys a chance to speak up. Head of household gives some people some problems, and that's why I'm slowing down here, because they're kind of confusing, the rules are.
It's a hard one, so you guys, if any questions you have,
yeah,
time to ask.
And I want you to know, guys, it's embarrassing sometimes to ask a question because you're always wondering, somebody be dumb. Well, we're all learning this, and we all had to learn this, including me. So believe me, I made lots of mistakes on this as I learned it. So,
hey, I've done taxes for all those years, and when I became a foster parent, I didn't know what the rules were. I had to go learn the rules.
You didn't deal with them. Yeah, that's right. So. No, that's true. So any comments or questions, please just speak up. I'm going to give you about 5 seconds to do that. And if not, I'm just going to move on. Okay. All right. So let's do some quizzes here. Tim is divorced. He paid more than half the cost of keeping up his home. His daughter, Susan, 5, lived with him for 8 months during the year. Tim is allowing Susan's mother to claim her as a dependent. Can Tim use head of household as filing status? Okay, so on the group chat, type yes or no.
And I don't know is a very reasonable answer if you're not clear.
It's okay.
Yeah, it's okay.
It's okay. You're right.
And just remember, we're going to go over it, so it's just fine. The idea is for you to learn it, not to you guys.
That's right. That's right. And
about
believe me, you know, most of the stuff that I have learned pretty well, I imagine this is probably true for Ryan. He can speak for himself, but I learn more from the mistakes that I make than the things I get right the first time around. So
always, because you never want to make them a second time.
right. So the answer is yes.
Mhm.
So Noemi, can you tell us why it is yes? Why is Tim allowed to claim head of household filing status? Excuse my coughing. I wonder if Noemi stepped away for a minute.
I think she did.
Oh, there she is. She's back.
His
So tell us
daughter lived with him for more than 6 months.
Okay. Well, let's. Yeah, that's part of it. I mean, she lived. Yes, he can. Can Tim?
And then he paid more than half the cost of keeping up his home.
Yep.
And Susan is his qualifying child.
That's exactly right. So what she did here, just so everyone can see, is she basically, sorry, I got to go back this way. She went through these tests. She started with the general requirements. Does he have a qualifying person that lived with him for more than half the year? Well, we haven't defined qualifying person, but we think so. That person lived with him for more than half the year. He provided more than half of the cost of keeping up the home. And then he is unmarried. So we're going to go to the unmarried requirements. I'm going to just pull them all up at once. So he can claim on his return. He can claim on his return a qualifying child. He could claim on them, except he gave it to the other parent.
Yeah.
So all he has to do is,
that's
right, he only had to be unmarried and meet one of these requirements. He had a qualifying child that he gave to the other, and the only reason that child's not on his return is because he gave it under this special rule for divorced to separated parents. He gave it to the other parent. That's it. That's how she got there, and that's 100% right.
And in case you guys didn't catch it,
yeah,
we have another person here now. Frank just walked in.
Oh.
Observation. In case you saw the person walking behind me.
I didn't even notice it. Okay, 2. Sam and Bridget are married and living together with their son, Mitchell, who's 9 years old, until Sam moved out on November 17th of the tax year. So, just to simplify this, Sam and Bridget, they're married with a child, and they all lived together until November 17th. Sam moved out. Bridget paid 100% of the cost of keeping up the home for herself and Mitchell. She also provided 100% of Mitchell's support after Sam moved out. Sam and Bridget are not divorced or legally separated. They are filing separate returns. Can Bridget use head of household filing status? Go ahead in there and put in yes or no in the chat.
We got 1 no from Rodolfo. 1 no from Naomi.
Okay, and what would you say, Amanda? You could just talk it in rather than try to type it on your phone. I think she's having trouble with her phone. Amanda, can you try again? We could not hear you.
Amanda, because I'm not hearing her at all.
Yeah, she's unmuted.
Yep.
Okay. Well, sorry, Amanda. We can't hear you.
Amanda, just give us a thumbs up or down.
Okay. Look,
it's up.
The answer is no, she can't, or no, she can't. The reason is, in fact, Rodolfo, you have the right answer. Tell us the reason why she cannot claim head of household. What disqualifies her?
She's not legally unmarried.
No, because remember, you can be married and still claim a child.
Mm-hmm.
Excuse me, and still claim head of household. So what part of that disqualified her?
Mm,
Noemi, can you help him out?
There's an
They are
important
not
part there.
they are not separated last 6 months of
There you
the tax
go.
year.
Yeah, remember that there's that requirement. If you're married, the very first thing is you have to be considered unmarried, and the first test is to be considered unmarried. You cannot have lived with your spouse at all during the last 6 months of the year. They lived together until November 17th. That's what disqualified him. Does that make sense, Rodolfo? How we got
yeah.
there?
Yeah. Okay.
Okay.
Yeah, that makes sense.
Now that brings up Ryan's point on test taking, though. Notice you had a 50-50 chance. You would have gotten that answer right. If for the wrong reason, you still would have gotten that answer right. So,
And in test taking, there's a lot of points up there if you think about it. If there's that many points, like he moved out on November 17th, paid 100% of the upkeep, 100% of Mitchell support, is not legally divorced, they are filing separate returns. That's 5 points themselves.
yeah.
Odds are at least one of those points are probably wrong, seeing they have so many of them. It's almost like it's overload.
Yeah.
So
Yeah. Okay, let's go on to the next one. I want one person to volunteer to handle this question. Read it out and give us an answer. Who wants to do it? Oh, come on. Surely someone can do it. I'd ask Amanda, but we seem to have lost her voice.
Amanda, you can do it in sign language. Oh.
Okay, let's do this. I'll tell you what, Amanda, I'm going to read it out and then you give me a yes or no. Yes is thumbs up, no is thumbs down. So Vivian is divorced. Her son, Claude, is 25 years old, lived with her all year. Vivian paid all the cost of keeping up the home and supporting Claude. Claude is not Vivian's qualifying child or qualifying dependent. Can Vivian use head of household? Give me a thumbs up or thumbs down. You're right. You're right. The reason being is because the question tells us it's not a qualifying child or qualifying dependent. If you don't have one of those, you don't have a qualifying person for head of household. That's exactly right. Okay, Noemi, I'm going to read this and then how about you try to answer this one, okay? Kim is 31 years old and single. Her boyfriend, John, is 28, and his son, Chase, is 4. And they lived with her all year. Kim paid more than half the cost of keeping up the home and supported John and Chase. She can claim them both as dependents on the return because we haven't talked about dependence requirements and when you can put them on the return. But this question is asking, can Kim use them for head of household filing status? Yes or no? I'm letting her read that again.
No.
You're right. You're right. Why does she not qualify for head of household filing status? Which rule is disqualifying her?
They are not qualifying dependents.
That's right. They're not a qualifying child because they're not even her related to her biologically in any fashion. And they're not qualifying dependents because there's no relationship there. As a result, she cannot claim head of household filing status. Remember, though, this is a great example. When we learn about dependence rules, there are circumstances where you can still claim somebody that's not related to you. Okay. All right. Rodolfo, you're on deck here.
Okay.
Lincoln and Sasha are married, but they have not lived together for 2 years. Their daughter, Anita, is 14 years old, lived with Lincoln all year, and Lincoln provided more than half the cost of keeping up their home. Lincoln and Sasha are not divorced or legally separated. They are filing separate returns. Can Lincoln use head of household filing status?
Yes.
You're right. You're right.
Mhm.
That's exactly right, because they are married, right?
Mhm. Yeah.
And
Fine,
are they
child.
is Lincoln considered unmarried? What's the rule for being considered unmarried?
Have to be divorced or legally separated.
No.
For at least the
No, no,
last.
no. That would make them single. No,
Right.
no. As somebody who's married for,
Oh.
and we're only talking for head of household filing status. Somebody who's married can be considered unmarried if you what?
Are not living together
During
For
the tax year.
the last 6 months
last
of the year.
6 months of
Okay.
the year. Yeah.
Okay.
Yeah, that's the key. That's the key. So in Lincoln's case, they did not live together. They haven't lived together for 2 years. They did not live together in the last 6 months of the year. And then the rest of the requirement is you provide to have more than half the cost of the household for a qualifying dependent, which he has. That's good. All right, so we've gotten through head of household, and I want you to know that's the one that gives most people the problem. The rest of them usually are pretty easy for people to remember. So now we're going to talk. So far we've talked about MFJ, married filing jointly, MFS, married filing separately, and head of household. Now we're going to talk about qualifying widower with a dependent child. Taxpayers whose spouse died in one of the 2 previous tax years may be able to use this filing status, QW, qualifying widow with dependent child. The QW filing status allows the person to use the exact same tax rates and standard deduction amounts that people who file jointly use. Now remember, I've already said MFJ, if you can ever use it, is usually your best filing status. It's going to give you the biggest deductions and biggest benefits and lowest tax rate.
And there really aren't too many exceptions to that.
No, that's exactly right. Yeah. And so here's a situation where if you've had your spouse pass away, remember we said if they pass away in the tax year, you file MFJ. Then for the next 2 years after the spouse passes away, if you have not gotten remarried and you have a qualifying child, qualifying dependent, you can actually use this status and still get the same benefits as if you were MFJ. It's called qualifying widower. Make sense so far?
Yes.
Okay. So this status, you can use this status if you meet all of these requirements. The taxpayer was entitled to file MFJ in the year the spouse passed away. And most cases, that's going to be true. Their spouse died in one of the 2 previous tax years and they did not marry again. And I want to stop on those 2 there's an easier way to think of it. In the year the spouse passes away, you file MFJ with the spouse. For the next 2 years, you file QW. Now that's assuming you did not remarry. Okay? All right. Now, the third bullet point, the taxpayer's son, daughter, or stepchild lived with them all year. Or a taxpayer has a child or stepchild, not a foster child, who you could claim as a dependent, except for certain special situations. That's a lot of detail there. And while it's kind of important, it's so rare, I don't think I want you to memorize this. I just want to go over it so you're aware of it. Remember, when taking tests, sometimes it's enough to know there's an exception to the rule and be able to recognize it, but not necessarily recall it from memory. So what are the exceptions? The exceptions are if that dependent had gross income of more than this, and that's the only reason they're not on your return, or the child filed a joint return. In other words, it's an adult child that filed a joint return, and that's why you couldn't claim them. Or the taxpayer could be claimed as a dependent on someone else's return for technical reasons, like divorced separated parents. So the only thing that's a little bit confusing here that I'm going to clarify is normally it's got to be your son, daughter, or stepchild that lived with you all year. And normally that child has to be on your return unless it meets one of these exceptions. Okay. Now, most people,
James,
yeah.
Rodolfo and I have to go. We have work.
I'm sorry, only heard part of what you said.
They have to go to work.
Oh, what time do we have here?
It's already 2:09.
I'm sorry, guys. I wasn't watching the time.
Yeah.
This is what we'll do. We're going to just get through this part and we'll cut it short. Do you guys have another 5 minutes? Can you afford another 5 minutes?
Okay.
Okay. If possible, try to do that. I'm sorry we're running over. We'll do a better job next time. Okay. And then for qualifying widower must paid more than half the cost of keeping up the home. Well, that makes sense. Okay. So, and then the last filing status is single. Basically, the filing status as single is not the same thing necessarily as being single, not married. You have to be not married. But if you don't qualify for any of the other filing statuses, this is your filing status. Okay. All right. Let's go through this real fast. How long can a taxpayer use qualifying widower with dependent child as their filing status? Noemi, can you tell me which answer is right?
Up to 2 years after their spouse dies.
Perfect.
Oh, that's perfect.
Perfect. Amanda, Herman's spouse died 3 years ago and he has not remarried. He paid more than half the cost of keeping up his home where he lives alone. He does not have any dependents. Which filing status may Herman use? Oh, I'm sorry. I forgot you couldn't talk. A, B, or C, or D? She just froze. She's having some problems. That's okay. I'm going to give you the answer. Single. And the reason it's single is he has no dependents already. That's the real reason. He has no dependents. You can't be qualifying widower with no dependents. Myra's spouse died 2 years ago, and she is not remarried. Myra paid more than half the cost of keeping up a home that was the main home for herself and her granddaughter, Helen, 7. Myra can claim Helen as a dependent. Which status may Myra use? In your own mind,
qualifying widower with dependent child.
she can use head of household. Spouse died. Myra's not. Oh, I know this one. Ignore this. Actually, she could use that. You're right, Noemi. This is where I caught an error in their stuff earlier, and I didn't have time to check it. Look, I just want you to notice some filing statuses are better than others. For a single taxpayer, this is the order where it's better. If you're single, try to get qualifying widower if you can. If not that, head of household. If not that, then use single. For somebody who's married, try to use MFJ if you can. If not that, try to use AHOH, head of household if you can. If not that, then use MFS. That you'll end up better. Okay. Bob's, I'm trying to think how much time we have here. You know what? There's only 2 more and then we're done. Bob's wife died 18 months ago and he's not remarried. Bob paid more than half the cost keeping up the home that was the main home for himself and his stepdaughter, Valerie. Bob can claim Valerie as a dependent. Based on tax rates, generally, what is the most advantageous filing status Bob qualifies to use? Which one is the best one, Noemi, for him?
Qualifying widower with dependent child.
There you go.
Yep, you're right. And Amanda, I saw your answer. You're exactly right. Vincent and Cynthia are married, but they have not lived together for the last 2 years. Each of them paid more than half the cost of keeping up separate homes where they lived all year, each with their own qualifying child, who they can claim as a dependent. Based on the tax rates, generally, what is the most advantageous filing status Vincent and Cynthia qualify to use? Want to give you a hint on this. It's a little bit tricky question. What is the most advantageous way they could actually file?
Right.
So I want, Amanda, would you kick up your answer on the screen since you're able to type it? I can't tell if you already answered or not. So could you kick it up?
Head of household is what you put.
Okay. What would you say, Noemi?
What do you think?
Yeah. Head of a household.
Guys, that's not the most
That's not it.
advantageous.
Huh?
MFJ is the most
Married
advantageous. They're
filing
still
jointly.
married.
They're still
They
married.
don't have to
even though they
live
haven't
together.
seen
They can
each other, yeah.
still file jointly. That's why I said
Uh-huh.
it's a little bit tricky here. Keep in mind, you always, and then real life, you want to help your clients the best you can get the most advantageous filing status they can. So if you can get them to MFJ, do it.
Because one of the important thing is look at it this way. You see it says Vincent and Cynthia are married but have not lived together for the last 2 years. Or are they on talking terms? If they're not on talking terms, then you
Yeah.
can't get them to cooperate. But if they're on talking terms and they're willing to work together, they can have the best of both worlds by married filing
That's right.
jointly.
They just put everything together. It doesn't matter that there are 2 households involved.
Mhm.
So it would be okay. All right, guys, that's it for this part. So what I want to tell you is we didn't get through everything we planned. We're okay. We would have if we had not spent that hour orienting you to using the tools, but I'm okay that we did.
Yeah,
So
I'm very
let me
glad.
tell you what we're going to do on Monday. We're going to go over dependence test, and we're going to look at some filing basics. So what I want you to do for Monday, I want you to make sure to read chapters 1 through 3, and then go ahead and start reading chapter 4.
Is
For the
it
next
chapters or unit?
Units. It's the
Units,
same
I'm sorry, I'm calling them chapters. Yeah, units. So I want you to use the passkey units 1 through 3. Make sure to read all of those. And then that's where we'll spend most of our time. And then if we have time, we'll start jumping into Unit 4. So start reading Unit 4, but no, you don't have to get all the way through it, okay? Because that's a whole session by itself, okay?
And remember,
can
we
we
got-
have a copy of your slide?
Yeah, I don't see
Mhm.
why not.
Yeah.
You know, let me work with Ryan, and on Monday we'll figure out a way to get all this information out to you in a better fashion so you're a little better prepared. But yes, I can.
Yeah, we can get them out to you usually as a PDF. So, and also we'll be here if you guys have questions.
Yes, yes.
So Rodolfo and Naomi, you guys both have to go. You're
Yeah.
done.
Yeah,
I know
we're
you have to
done.
get to work.
And Amanda,
If you have any questions, we're here.
yeah, if you got any questions, we're here. Otherwise, you said I'm hoping you'll have your computer up and running by Monday, because you'll
Mhm.
find it much easier to interact on a computer than your phone, and
And
easier to do things.
And I may cover a phone thing a little bit, so we have a little more flexibility on the phone.
Yeah, no, that'd be
So-
good. Yeah, or even a little cheat sheet you could send out. If you
something
did
so you guys know how to use the app. That's a good idea for us.
Yep.
Whatever makes it easier for you guys.
Okay, Amanda, do you need us anymore? If not, feel free to go. We're done for the day. We'll see you on Monday. Bye.
Okay. See you guys.
Hold tight, Ryan, if you're still going to stay on.